Hey Fools, Matt Copenheffer here with part of the Ask a Fool series. Today we have a question from our Facebook page. The question is very simply, is Fannie Mae a good buy? That comes from Marty Ford. Marty, thanks a lot for the question. This is actually a great question to be tackling right now because Fannie Mae's over-the-counter shares have been soaring lately. There's been a lot of talk about the Fannie Mae and Freddie Mac shares. There have been a lot of hedge funds piling in actually to the preferred shares of Fannie Mae and Freddie Mac. These are different than the shares that are trading over the counter, and the over the counter shares are those FNMA shares. So what I did was I went ahead and I cracked open Fannie Mae's 10K annual report for 2012. And there's some interesting stuff that we can find right there on the very first page of Fannie Mae's annual report. And I'm going to go ahead and read a little excerpt from it. So right at the very top of that first page, it says, "We have been under conservatorship with the Federal Housing Finance Agency, acting as conservator since September 6, 2008. As conservator, FHFA succeeded to all rights, titles, powers, and privileges of the company and of any shareholder, officer, or director of the company with respect to the company and its assets." It continues, "Our directors do not have any fiduciary duties to any person or entity except to the conservator, and accordingly are not obligated to consider the interests of the company, the holders of our equity or debt securities, or the holders of Fannie Mae MBS unless specifically directed to do so by the conservator." Scroll a little bit down and you get to one more really telling little paragraph in this annual report. And again, this is just the first page here. It says, "Our conservatorship has no specified termination date, and we do not know when or how the conservatorship will be terminated, whether we will continue to exist following the conservatorship, or what changes to our business structure will be made following the conservatorship." What does this all mean? Very simply, Fannie Mae is in conservatorship. As long as it is, nobody cares about equity holders. Nobody cares about debt holders. All of the money from the business is going to the government. The business is being run for the benefit of the government, however the government wants. There is still a lot of money to be paid back. Over $100 billion is still left in that bailout of Fannie Mae that needs to be paid back. And meanwhile, you've got people in Congress, you've got the president talking about that Fannie Mae and Freddie Mac need to be wound down. So what do we have here? In very simple terms, we have a company that's in conservatorship, being run for the government, giving all of its profits to the government, and you have a government that's talking about we need to wind down this company. Is there a possibility that Fannie Mae and Freddie Mac could be reprivatized and shareholders could end up working out here? Sure, that is in the realm of possibility. But this is not a stock that you're going to buy like any other stock, like an operating business saying, oh, I think this will succeed. I'm going to be a party to the profits of this business. That's not what we're seeing here. What we have here is a speculative situation where you're betting on the idea that A, Fannie Mae will be able to pay back the bailout that it got from the federal government, B, that the government will reprivatize Fannie Mae, and C, by the time that happens, this will all work out to your financial favor. That's a lot to bet on there, and I think for most investors, most readers probably watching this video, this is the kind of speculative situation you just really don't want to be playing in. I'm not putting my money on Fannie Mae, and that's my bottom line. So again, this is Matt Copenheffer here, and you can always read more on Fool.com.